How's it going, everybody? Jake Royall is back on the webinar. We're going to wait for a few people to show up. Some stragglers, looks like maybe, and I'll check back in a few minutes. Welcome to the Thursday webinar at Back to Future Trading. We're going to be talking about TachEon TimeWarp, probably some other fun and games. How's it going, everybody? Chris, here to learn more. Excellent. Notice that there's a couple people that are non-customers. So there's two reasons for this webinar, two main purposes, if you will. One is to, I don't know, just some community cohesion and just checking in and saying hi to your fellow customers. And I don't know, it's like a bonding moment in a sense, and to learn a little bit more from somebody like myself who has been successful with the software. And then there's also the other aspect, which is arguably probably more so, is to sell the software. I'm not the sales guy, though. I'm just the webinar presenter at the moment, but I'm also the lead mentor at Back to the Future Trading. So if anybody want to look, if you're a current customer, you can book private sessions with me. We can go over all sorts of stuff. If you have any holes that you'd like me to fill in the mind of the TachEon softwares, you can just send me an email at jacob@backtothefuturetrading.com and I get you more information on that. So the sales guy is Dave. Dave, do you want to put your info in the chat? So anybody who doesn't have the software, just give Dave a ring after the webinar, and who knows, there could be deals. There could be deals. There could be no deals. Hopefully there'll be deals. Okay, so, okay, I'm gonna do my typical, take a couple deep breaths and settle in. I've had 2 weeks off, so let's all take a deep breath together. I mean, why not? The trading day's pretty much over, right? We've got 5 more minutes left. I'm done. Here we go. Everybody in. And exhale. I'm going to do one more. And in. And out. It's amazing what 2 deep breaths can do for the human body and mind. All right. So let's see, who am I talking to here? Welcome, everybody. A bunch of people here today. I have a brand new office that I'm sitting in today, so excuse me while I might be fiddling around a little bit. I kind of shift desks slightly to do the webinars, so I'm just kind of getting used to that. Thanks to Back to the Future Trading software, I was able to move into a freaking 4-bedroom, 3-bathroom house in Santa Barbara, California. The garage and everything. Backyard, front yard, it's insane. So thank you, Michael and Ron, for this ridiculously amazing softwares too. There's some other products that Back to the Future makes that I really enjoy as well. But this is where most people start with TachEon TimeWarp. It's not $100 software. It's not $200 software. It's professional institutional grade software as far as I'm concerned. Yeah, it costs money. It does. I've run multiple businesses, and as far as I have in my experience, businesses it takes money to make money. For 4 years or so, I thought that I could do this with free indicators, and personally, I can't do it. I suck at it. I really needed this software. I mean, I guess there's a reason that 95% of retail traders lose their account in the first 6 months. That's a scary statistic. And not until I bought this exact software over 2 years ago did I start to, it still took me a second because I was stuck in my old ways and I had bad emotional habits, bad trading habits. But eventually, my trading started to improve, and it was no small feat. I would say 95% of it technically was from Back to the Future trading software. Emotionally, that's a whole other story, but so I guess it's not really that much of an other story. Seeing how these signals that we get here at like 3:55, 3 o'clock, I guess we can get rid of this stuff. These signals help me emotionally by knowing that I usually only allow myself one opportunity to trade from signal to signal. Sometimes I'll sneak in another one. I have reasons and methods for that. But just to squelch, if you will, my over trading bad habit, let alone that the signals actually work. They're based on historical data. You folks who do not own the software yet, have you seen any videos? Is this your first experience with the software? How did you find us? It's always or anybody you want to put in the chat, how did you find Back to the Future? I love having meetings with people and learning that aspect, because it's just really interesting. I mean, I don't know if anybody's ever messed around with the SHAF indicator. Supposedly time-based, supposedly not lagging, but it's free. Douglas Schaff, I believe, is the inventor. I can't seem to get this arm right. There we go. And I mean, it's not that popular of an indicator, and I was messing around on YouTube looking for more info on the Schaff because it's about time. It's a time indicator, time cycle. And way down at the bottom of the YouTube search was this little white chart with blue and I think it was red candles. I don't know what colors they were using back then. And then that had these weird dots out into the future. And I was like, what the heck is this? I was like, oh, this is probably some really awesome free software or a free indicator. It's like, oh, I could probably just, and it wasn't free. But I watched, I don't even know how many YouTube videos, hours, and I just became more and more convinced that this is what I needed. And thank God I pulled the trigger and bought software. I never looked back, and I never had buyer's remorse. Really didn't. Hedge guy. What's up, hedge guy? Jimmy Connors still live in there? I don't know. Oh, Jerry, man, that's nice. Introduced by a trading buddy to the software. That is like the red carpet, baby. That is the red carpet. It's slideshow time. How do I do this slideshow? Start from beginning. So here is this slide number 1, Back to the Future trading. TachEon TimeWarp, the power of predictive trading technology. And that's what this is. It's technology. It's 12,000 lines of code. Ain't no 12,000 lines of code and years of research going to be a free indicator. And it works. There's a lot of companies out there that sell trading software. But there's no company that I know about that posts the times of the moves days in advance, literally it could be either 1 or 2 days in advance, depending on what day we're talking about. If we're talking about Wednesday or Thursday, no other company that I know of posts the swing points 2 days in advance, and then emails. Not only do they post it on their website, and you can take a screenshot of it, they also email 4,000, 5,000, 6,000. I don't even know how many thousand. I think the email list is almost probably 10,000, but there's Dave, is there 3,000 or 4,000 customers? Somewhere in there. Anyway, thousands of people get these emails. Let's just take a look at them real quick in case anybody, where are we here? So we got these emails get sent out. every Tuesday for the Wednesday and the Thursday trading sessions. So you just go back to futuretrading.com/webinars, and we can look at the TimeWarp projections. And we can see Wednesday, 28th. They've been doing this for how many years have they been doing this? I want to say 10 years, but it might be like 7 or 8. I don't know. I'm not the owner of the company. I'm the webinar guy, lead instructor, mentor guy. So I don't know, something like that. So here we can see the times for Wednesday, September 28th, market forecasts on the ES 5-minute. We can zoom in and we can actually see the time. So the emails that go out to however many thousands of customers and non-customers alike include every single one of these screenshots. ES 3-minute, CL 3-minute, 1-minute, gold, DAX, NQ, all sorts of stuff. And these times sync up with the charts that I will be showing in a little bit. Okay, so there's me, there's my dog. So we're talking about tools. We're talking about professional, institutional grade trading tools, trading technology. I'm not going to show up to a brand new job hoping to make money and as a carpenter or a framer or something, and I want to get respect from the crew. I'm not going to show up with this $2 free yard sale hammer down here. I'll get lopped off the job site. I mean, we're playing with the big boys and girls. We're trading against and with actually a lot of these institutional grade moves. TimeWarp does call out, but we're in the markets with human beings, robots, and banks and hedge funds, and like they have sledgehammers. They have specialized hammers. I don't think that they're using these little DIY hammers. They've spent however many thousands, millions of dollars on their systems, their technologies, their softwares. And like, I'm just speaking from personal experience, how could I expect to compete with that on that level unless I've spent some money on software from a company that's been around for a long time? How long is it? I think 12 years? No, 13. I think they just celebrated their 13th year in business, and that's saying something. I mean, any business over 5 years, something like 50%, 60% or so, I don't know what the percentages is. It could be 50 to 75% of businesses fail in the first 5 years. In the first 10 years, it might be only 20% that survive. Anybody know that statistic? I'm just going to take a look at some questions here. Oh, okay. Does Michael still help with downloading the software? Rachel's job is she's the one who helps with downloading the software. Yeah. Okay, so yeah, we're talking about real tools here, like this nice blue, it almost looks like a roofing hammer, nice framing hammer. That's what I want. I don't want this. So like I was saying, we're the only company online that gives the times and directions in advance, gives you the trading rules in advance. So not just the signals, but we also have rules, definitive, defined, actual rules. It's like really is the full package. And then yeah, 2 days later, we can add up some results for pass or fail. So my big thesis is that although the world looks messy and chaotic, if you translate it into the world of numbers and shapes, patterns emerge, and you start to understand why things are the way they are. That couldn't be more true as far as I'm concerned. Every day when I'm looking at the markets, I mean, well, especially, I thought I saw patterns, and I did. I did, but before I bought the software. But now that I have the software, I have this whole other view of the markets and patterns. I'm not just looking for double bottoms, head and shoulders. Here's a little head and shoulders here. I'm not looking for V tops or V bottoms or flags or pennants. I mean, it's okay. You can definitely add that into your trading system with TimeWarp, but I knew for years that there was something missing from my trading, and I knew it was time, and I didn't trust the Fibonacci extension, time extensions. I don't know, it just seems so arbitrary. And then Back to the Future came along, and I bought the software. So what the software does, for anybody who doesn't know, is it looks back in time and projects out the swing points that seem to be repeating often enough out into the future. Thus the name of the company, Back to the Future. You're looking back, then to the future. So the 12,000 lines of code does all that for us, and thank goodness gracious that I don't have to do that on my own. That's worth however many thousands of dollars just right there, because I don't even know how to even go about it. It's, yeah, not going to happen. So anybody who's read the new Market Wizards or any of the Market Wizards books by Mr. Schwager there, my experience with the 36 interviews conducted for this book and its predecessor leaves me with little doubt that the random walk theory is wrong. I've read multiple books. I think, what was it, Quants? So the Rise of the Quants? There's another book where, I don't know, they're one side was trying to argue the random walk theory, and it's like, why? It just seems so obvious to me. Anyway, I'm not going to get stuck on that. Here's a little graphic on the emails go out on Tuesday. Then there's the signals for Wednesday and Thursday, and we can actually take a look and see how the signals performed Wednesday and Thursday. So there's the signal, that's the dot, right? So let me just put it up 1 second here. There's the signal, which is the dot. 6:45, 7 o'clock, 7:30, 8:15, 9:20. And then there's the setup. Completely, well, I was going to say completely different, but they're not completely different. Then there's the setup. This is the setup that I teach, show on the webinars. And we'll get into that in a few minutes. This here on the left is one of the multiple Apex accounts that I've qualified for a prop trading firm called Apex. This one is I used I think it was the Warp 3-minute, NASDAQ 3-minute with Warp, and this one over here is Ron's Pro Trading Room. So when you buy the software, you also have access for a small monthly fee to Ron's Pro Trading Room, and this is the equity curve in his room Tuesday, Wednesday, and Thursday for the first 2 hours or so of the trading day over the last year. And buy the software, and then you can actually see all the recordings. And yeah, that's legit. It's legit. So we want to know when to be proactive in the future instead of just reacting all the time with the lagging tools. That was a game changer for me. It still is, because we have a playing field that isn't level. It's just not, and it will never be. But with software such as what we have here, it at least helps to level the field. I mean, good enough to make money. That's all that really matters, right? I mean, look at it. I mean, I show this every time I do the webinar. I'm sure that the penalties for Bank of America are substantially higher than this. This is from, I think I posted this like 3 months ago or something. But I mean, let's see. Yeah, Bank of America coming in on top. And do you think the government really cares? No, because they're going to get, where does this penalty money go to? Oops, ow, oh, stop slapping my wrist, Big Daddy. insider trading, who knows? So many different reasons to get for just so much nefarious activities. So many. So Mark Douglas, Trading in the Zone. I hope everybody has read Trading in the Zone. I feel like it should be required reading. If you haven't read this book, I highly recommend it. It's a godfather of trading psychology, Mr. Mark Douglas. There is a random distribution between wins and losses for any given set of variables that defines an edge. This truth makes trading a probability or numbers game. When you really believe that trading is simply a probability game, concepts like right and wrong or win and lose no longer have the same significance. As a result, your expectations will be in harmony with the possibilities. Trading in the Zone, Mark Douglas. So that's the goal for me every single morning when I'm trading, is just to try to be in harmony. I've been doing really well the last, for a while. I mean, I feel like I've reached some groove over the last couple of weeks, especially around the being in harmony with the possibilities. Like, okay, well, that one lost money, but it doesn't mean I'm a loser, because I don't know. I am an idiot. My self-talk has even improved lately. So Mark Douglas has 5 fundamental truths and 7 principles of consistency. I highly recommend writing these down by hand or putting them on your chart or something. It's helped me substantially. I have 2 3x5 cards that I hand wrote that it's always on my trading desk. One with the 5 fundamentals and one with the 7 principles. So the 5 fundamental truths of trading: anything can happen. Number 2, you don't need to know what is going to happen next in order to make money. Number 3, there is a random distribution between wins and losses for any given set of variables that define an edge. And that's what we're going to be going over. We're going to be going over an edge. I have no idea if the edge that I use is going to be, I didn't trade I think we're going to go over the 1 minute and the 5 minute. I don't trade the 1 minute and the 5 minute. I trade the 3 minute. But the 3 minute signals aren't handed out in the emails. There are no, so I figured maybe we'll look at the 1 minute and the 5 minute, or one or the other. We can also look at the 3 minute. I don't know. I guess it doesn't matter. But I would rather show signals that are actually in the emails. And I actually had an email from, hopefully he'd be okay if I show this. Maybe I can do it without showing his name. I don't know if I can or not. Oh, look at that. I kind of can. There you go. Hey, Jake, I'm an existing Back to the Future customer. Just want to let you know I've had much better luck with software since I started using your strategy, using 1 minute NQ. And then this is Mr. Bell. I had to send this. What's cool about this email is I don't think I've spoken to this gentleman. He just was so excited about how well the software was working with the system that I'm going to teach everybody, that he wanted to send me an email. I love getting emails like that. I actually have a legitimate smile on my face right now. It's not even forced. So also got a bunch of other, maybe I should show a few while we're on the subject, and then we'll get back to the principles. Let's see, where is it? I thought I had it open. Just a 1 second. There it is. There it is. And yeah, so like, well, I don't know if people are going to be okay with me sharing all their names and stuff. Anyway, I mean, oh, maybe I can drag it in like this. This gentleman sent me an email. Just wanted to give you a shout out, Jacob Royall, for his training services. I say I love the tools. They can be a bit challenging with the versatility they provide. And I did run into that when I first started. because they are so versatile. But the idea is to, even though you can use these tools in so many different ways, the idea for me was, well, originally it was try as many crazy ideas as humanly possible, and then basically just throw darts at the wall blindfolded and see, and take the blindfold off and see what sticks or what's stuck. So yeah, he talks about, I'm just trying to do it without showing his name. I don't know. Maybe next webinar I can just like black out the names or something. But you can see a bunch of emails that I've gotten. Or I could send an email to everybody and say, hey, do you mind if I show this on a webinar? Where were we? Number 4, an edge is nothing more than indication of a higher probability of one thing happening over another. So when we go over these charts, we're gonna see trades that don't work. There's no such thing, obviously, as a perfect 100% winning trading strategy. I don't care if it's a 40% winning win rate, as long as I'm making money. I don't care what the win rate is. The only reason I personally care what the win rate is over time is so I can emotionally prepare for X amount of non-winning or losing money trades in the session. Like, oh, this strategy works 60% of the time, it loses 40% of the time. Okay, cool, there was a loss, no problem. Nope, there's a win, there's another loss, there's another loss. What's my max loss? How many losses in a row is the max? So if I've had 4 losses in a row, then maybe there's a problem with the day or with the strategy. That's what matters more to me. And then number 5, every moment in the market is unique. Every moment in the market is unique. This is probably number 5 and number 1 are probably the ones that pop into my mind the most when I'm trading. Like, well, I don't know about this move because there's a bull flag, and I don't know if there's a sell dot there, but the volume wasn't as low, and I'll talk myself right out of trades. And then I think, oh, anything can happen. Oh yeah. Oh, every moment in the market is unique. Oh yeah, that's right. I almost forgot. 7 principles of consistency. Number 1, I objectively identify my edges. I mean, how many of us here on this webinar can objectively identify our edges? It can be a real challenge. I mean, for years I thought I could objectively identify my edge, and then I started working with this friend of mine who's ultra smart, didn't really know much about trading, and he's the kind of person that just questions everything, but like questions everything like a scientist basically. And I realized that I couldn't actually define my edges to satisfy his mind. And I got to this point of frustration working with him, with myself really. That's when I started searching for the shaft indicator, and then I came across Back to the Future trading and TimeWarp, and it was working with him that actually pushed me into the next level of actually spending money for the first time, real money too. It's not $100, it's not $200, real money on trading software. So shout out to Jeff. Thank you, Jeff. Thank you for being such a, I want to say hard I'm not allowed to, probably not allowed to curse. I managed to get through it's like 8 webinars and not cursing. Not a hard person to work with, but just yes, I think you guys get what I'm trying to say. Number 2, I predefine the risk of every trade. Number 3, I completely accept the risk, or I'm willing to let go of the trade. Number 4, I act on my edges without reservation or hesitation. Number 5, I pay myself as the market makes money available to me. Number 6, I continually monitor my susceptibility for making errors. Number 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. I think it's really helpful every time I do a webinar to go over the 5 fundamentals and the 7 principles. I can imagine, well, if I was watching a webinar and the person presenting through this right in the middle, smack dab in the middle of the webinar, I'm like, oh, thanks for reminding me about these things. I mean, this is tried and true. Mark Douglas worked with hundreds of successful traders. And over time, these are the things that got boiled down and or rose to the surface. The system that I designed, that I teach, now obviously it could be more complicated, but the whole idea was to make it as simple as possible, and to also have it comply with the 7 principles of consistency and the 5 fundamental truths. I think every trading system must comply with the 7 and the 5. So Gann's quotes on time. Maybe we can come back to we might as well do a little bit. I just want to get to the charts. So W.D. Gann, arguably one of the most successful traders of all time. Hopefully everybody has heard of W.D. Gann. I'm pretty sure Michael would say that he was the inspiration behind a lot of the tools that Back to the Future has made. So time is the most important factor of all, most important, and not until sufficient time has expired does any big move start up or down. Absolutely, I see it every day. Time is the most important factor, most important in determining market moves, and by studying the past records of the averages of individual stocks, you'll be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. There is a definite relation between time and price. So that's what TimeWarp does for us. It studies the past records of the averages of the swings, of the highs and the lows, the moves, and then and it proves that it does repeat because there is an edge there. I mean, like, check this out for anybody who wants to have a refresher. The last, I don't know, when did I start with this? Oh, that's right here on the dates. Duh. So from July 27th, so how many trading days do we have here? These were all recorded on the webinars. They're all posted on YouTube. You can go back and check out. 727, so 1, 2, 3, 4, 5, 6, 7, 8 trading days. 8 trading days, 22,000. Is that correct? Yeah. And then the 18th. Damn, there's a lot of trades on the 18th. Wow. Anyway, so I have more spreadsheets somewhere. Lots of spreadsheets. Now, by a study of time periods and time cycles, you will learn why tops and bottoms are found at certain times and why resistance levels are strong at certain times and bottoms and tops hold around them. So this is the last thing I want to go over before we look at some charts. So big money follows routines. And that's what this software does, is it finds the big money moves. At least that's the idea. I mean, yeah, routines like federal regulations, FOMC times, dates, internal structure, scheduled phone calls, scheduled reports internally in the companies, let alone on certain instruments like NASDAQ has the certain, I mean, NASDAQ has its own trading calendar. I mean, study that TimeWarp, and it does. Okay, cool. All right, just show me where the dots are. Show me where the dots are. So if billions and trillions are moved in and out of those markets at those times, we should see a trail. We see the TimeWarp sees the trail and then projects that trail and like, oh, okay, well, we took a left and then a right and then a left. And looks like we're coming up on that time again. So we're probably gonna take a right and then a left and then a right. Just makes sense. I think we could probably get into some charts now. Let's do it. You guys don't want to see, you folks don't want to see charts, do you? You'd rather just listen to me yap for another 30 minutes? No? Yes? No? Let me look at some questions. Okay, thank you, Dave, for that. Thank you, Dave, again. Yes, 1 minute. What's it? Oh yeah, good question. Roman. I mean, you could technically use this on any time frame, as long as your computer can handle it. Because the bots, like the institutional bots, they get turned on and turned off at certain times. I mean, let alone I have heard that, and let alone that. But why wouldn't bots have some type of time cycle? Like, I mean, I wouldn't be able to figure it out, but at least, I mean, TimeWarp does. I've seen Michael do a 15-second ES chart and just crush it on one of these webinars. Yeah. Mark, I do not run a trade room. Nope. If I've thought about it, I've had people ask, but my personal trading is really, really important to me. So I don't know. I wouldn't, if I did run a trade room, it wouldn't be during the open for the first 2 hours. I don't know. I've thought about it. I just need to concentrate on one thing at a time for now. Thanks for the question though, Mark. I appreciate it. All right, so let's see. Let's teach the system real quick. I already pulled up. I was being proactive today, and I already made a little example of what the setup looks like. Well, first, for anybody who doesn't know, we can get into patterns. Everybody has this handout in the chat. I believe you can access it. Handouts 1 of 5, histogram guidebook version 3 PDF. You can download this. And it talks about what pattern 4s are, 1, 2, well, there's 1, 2, 3s don't, there's kind of a vague, it's not, I mean, it is a pattern, it's just chop. So really you can just think about it as pattern 1, pattern 2, pattern 4, pattern 5, pattern 6, and pattern 7, which you don't, I barely bother with, especially with warp. And then there's pattern 8 and 9. And it does take a second to wrap your head around what the heck a pattern 4 and a 5 are compared to a 1 and a 2. But I highly recommend trying to wrap your head around it. I don't want to teach a whole class on it right now, but it's really worth it. I mean, we could possibly, if I have time, energy. Oh, I do have commitments later. We can maybe compare like a 5-minute chart with using patterns and a 5-minute chart without using patterns. It's an idea. We can get back to that though. But this histogram guidebook's great. It's very simple. Michael puts a little of his humor in there and everything. Intentionally, I feel like making it not that serious. Like, it's take a deep breath. It's okay. You can get through it. It's only like 8 pages. But it's a unique way of looking at the markets. I mean, it is not normal. Anybody who doesn't have the software and you're used to trading with stochastics or RSIs or EMA crossovers, MACDs, flags, and pennants and Fibonacci retracements, you can still use all that stuff if you want, but you certainly don't need it. I don't use that stuff anymore. But if you're used to that, it might take you a second. But I don't know, maybe not. Let's see how fast I can teach my little system here. First of all, what we need to know is that white dots start out as basically meaning the price should go up, or the price has gone up in the past enough on the average for TimeWarp to project again at 645 that price could move to the upside, and vice versa for blue. So we can just think about it as white dot means price up, blue dot means price down, white dot up, blue dot down, white dot up, and so on. Very, very simple. Now that doesn't mean that the market is just going to go blink, 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 blink. That's not how the markets work, obviously. So the idea is to look at these signals, especially in regards to the system that I'm going to show you folks. try to look at them as windows of buying and windows of selling. Right? So, oops. Let me go ahead and do this real quick here. Change this to green. Change this to green. Bam, boom. I'll switch that back there. Copy this. So there's a buy window from 6:45 to 7 o'clock. There's a sell window from 7 o'clock to 7:30. Buy window 7:30 to 8:15. 8:15 to 9:20 is a sell window. Pretty simple, right? Maybe the price will shoot. Maybe the price will shoot straight up at 6:45. Maybe it won't, but the edge says that it's more likely than not that the price will go up. We don't know how high, and we don't know when. It could happen right at 6:45. It could happen a little bit before. It could happen one bar later. It could happen. I mean, it could happen one bar before the next signal. But you know what's cool about this is it's not woo-woo. It's not. I know I'm in California. People use that term woo-woo a lot. It's basically just means like hocus pocus, magical craziness. It's not. It's just the software finding moves that are repeated and projecting them out in the future. It's the code finding this. So you know maybe maybe we'll move down and then then we might move up. Then we might move down again, and we might move up, and then we might move down. Any of that stuff's possible. And it's also possible that the move completely goes in the opposite direction. And that's when we get into the pattern 4s and 5s. We might be able to get into a little bit of that, but I don't know, it's probably doubtful. Okay, so we got, everybody understand that? Hopefully. I'm just looking at some questions. Do you mind a sell rate if I see one trade for them? Yeah. Well, TimeWarp doesn't work on range charts because range is not based on time. Range charts are based on range. So TimeWarp will work on Renko bars, anything that has to do with time. TimeWarp will work on, but range bars, it's not gonna work. You can use range bars as a supplement to when to enter, when to exit. I do that actually often. I have done that. Okay, so let's see. So remember, white dots mean up. So here at the white dot, actually, maybe I should actually move this out of the way for now. Bear with me for a second. I probably should have started without that there. It's the first time I tried to be proactive and I'm like, oh, that doesn't really work. But I have all the writing done at least. That takes time. Okay, so at 3 o'clock, we have a white dot. And that typically means, if you will, that, well, either way, it doesn't really mean anything. It suggests, based on historical evidence, that the price could go up. It's more likely going to go up at 3 o'clock than go down. With my system, I don't just enter at the signal candle. So if you did, then you just and it does work over time. It plays out. I mean, there's a definitive edge with this software if you just trade dot to dot. If you can handle that emotionally, I personally can't. So I developed a system that I can emotionally handle. So if you did trade dot to dot, and by dot to dot, it just means sell at 145 at the close of that candle, and then let go of the position at 3 o'clock. At 120, buy, and then let go of that position at 145 for a loss. et cetera, et cetera, et cetera. And then, we have other rules for the dot-to-dot system that you can see in any of the webinars that Michael teaches. But for my system, we basically just want 3 colors aligned, or the colors aligned. So this is a 21 period HMA. And my settings, by the way, are standard settings. Before we get into anything further, just want to show everybody. Make sure, actually. Swing 8, calendar days, 7, 14. The exact same settings that are sent out on all the emails. So white dot means up. And then let's talk about what these other lines are, actually. So this blue line here, we call this the dot price line or the stop price line. The software automatically prints these dots and these lines, and then you can tell the software how far you want these dots and these lines away from the close of the signal candle. Right now, we have the setting as ATR, so the average true range. I'll just make sure here. It's the average true range of the last 7 bars. That's how far our stop price line is, right here. Volatility stop offset ATR multiple is 1.5. So we're 7 bars average, and then we tell the software to place that stop 1.5 times the average true range of the last 7 bars. Does that make sense? Oh yeah, no worries, Luke. Okay. Whoa. Okay, so this is the stop price line, or the dot price line. Dot. And this other line, the solid line here, this is called the open price line. It's the open of the next candle. It's actually the close of the signal candle, but we call them open price lines or OPLs. Oops, spell price right. OPL. Okay. So for the first setup that I'll show you, the open price line is of massive significance. So we're in a buy window here. So let's look at the 3 o'clock signal. We need a candle to close above the open price line before we go long. We also need the HMA to be white. So we need a white dot, a white open price line, and a white HMA to go long. We don't need to close up necessarily above or below the HMA because HMAs are so ridiculously fast at reacting. We're just going based on the color. Now I have played around with one or the other, close above, below. I don't have any definitive data on which way is better. This is just how I've been teaching, so I'll continue this this way. Oh, that's a nice breeze. That reminds me to drink my coconut water. 1 second. So let's see what happens on the next candle. Does everybody understand white dot means up? So we're looking for buys. We have a white HMA. Oops, geez. And now we have a white open price line and a white dot. Now we just need a close above. We need a candle closing above the open price line to enter. So we'll wait and we can count down for 5 minutes. So we know that this opportunity is coming from way back, from days in the past. So okay, so the white open price line, close above open price line. That's what we're looking for. And then there it is. So this is our candle of significance here. This is our entry candle.
So we got a white HMA, white dot, white open price line, closes above. So we're going to enter 3 positions right at the close of this candle. 5, 4, 3, 2, 1, buy market, or you can drag a limit order in. Anyway, you want to get your entry as close as you can to the close of that candle. And then we're going to apply this cool little Fibonacci tool thing that I made. It's really just a Fibonacci tool, it's all it is. I just colored it, 7 price levels. And you can take a screenshot of this or pause the video. So and then we have some color. So you can create that yourself quite easily. If you want to book a one-on-one with me or whatever, I can send you the file as well. Or you can just pause the video or just let me know and I'll send you the file. Okay. So our first target is going to be this line here. We don't really need to see that anymore. Our second target is going to be this line here. So it's a 1-to-1 and a 2-to-1. And then we're going to have all 3 stops. And all 3 stops we don't need to see that anymore. We don't need to see that anymore. We don't need to see that. Just clean this up. Everybody gets that, hopefully. Go away. Okay, and then all of our stops, all 3 position stops are going to be placed. It's a little hard to see on this particular move. Where's the wick? There's the wick right there. So here's our entry. See the wick right there? So when I start my, after I enter my position, I'm gonna get my Fibonacci tool out, and then I'm gonna anchor it right here, and then I'm just gonna drag it. All I'm doing is I'm looking down here at the wick. I'm not looking up here, looking down here at the wick, and then just drag the stop to the wick, or yeah, the stop line of the Fib tool. So here we're gonna have all 3 stops are gonna be placed here. Our targets are going to be placed. We're going to drag our targets in with our ATM. We'll have put them up away. We're going to have a target 1, 1-to-1, target 2, 2-to-1, and our runner position to maximize one position. Far out in the distance, who knows? I don't know. You can put it a few hundred ticks above whatever your ATM is. And as soon as we hit target 1, we're going to move our stops to our 2 remaining stops to break even. So here's 3 stops, and I highly recommend putting those stops 15 ticks below the wick of the entry candle. At least if you're trading NASDAQ. I don't know about any other market, but if you're trading NASDAQ, I highly recommend 15 ticks below. Maybe even up to 25 ticks below on the 5-minute chart, and you should be good. Okay, so here we hit target 1, so we don't need that anymore. And we don't need the 3rd stop because we've hit target 1. And because we hit target 1, we're going to move our stops, 2 remaining stops to break even. And we're going to proceed, and we hit target 2. So that means we only have 1 stop remaining. And we're going to hold that position all the way until 355. So that trade would have looked like this. Target 1, target 2, and hold the runner to 355. So we can drag this out farther just to help everybody's visuals. Does that make sense? It's pretty simple, really. And then right over here, we actually have a short. I'll show you a short. Very simple. Let's get these lines out of the way. So put these down here. Okay, so at 145, we know we have a shorting opportunity coming up. And here we go, there it is. 145, we need a candle closing below the open price line, and we need a candle, or we need the HMA to be blue. Blue dot, close below blue open price line, blue HMA. There it is, tiny little thing. And then we drag to the wick. And then we're gonna have the same target 1 here, target 2 here, and the runner. So there's target 1, almost target 2, there's target 2. And then we have the runner. Looks like it might come back and stop us at break even. Oh, just barely, it does not though. So target 2, target 1, all 3 stops, enter positions. So let's make that 1, 2, 3. Is this making sense? So you drag your target 1 in, drag your target 2 in. So that would look like this in real time. And then your runner would be out here. So we hit target 1 here. Almost hit target 2. Then we hit it. Then we hold on to that runner position. Almost get stopped at break even, but we don't. And then we hold all the way to 3 o'clock. So that's, I mean, that's really, really nice. You know, not every trade works, but over time, certainly seems to have an edge as far as my experience with it. Hundreds, maybe even 1,000 trades at this point. Okay, does everybody get that? This chart is from today, Richard. Okay, all right, so there's one more trade setup. It's basically the same exact thing, except we're going the opposite direction of the signal. Let me see if I can find one. Oh, come on, office chair. Get in there. There we go. Let's see. No. Might have better luck on the 1 minute. I'm gonna find one that looks pretty. Oh, here we go. Oh, there we go. Okay, so sometimes the banks don't show up to the moves. And what that looks like is a puncture of the dot price line. So instead of going long, well, that's not a good example because we actually could have, maybe this is a better example. That doesn't quite close below it though. Hold on a second, I'll find one. It's a 1 minute chart. I need to find one that looks good. Almost. Oh man, those setups are ugly today. Oh, here you go, right in the beginning of the day. Okay, so at 9:31, we can see that a white dot. I mean, we should be pumping up, right? But we don't. We actually go the opposite direction. We never get a candle closing above the open price line, so we didn't enter a long here, so that's good. And then we actually have the opposite happen. We have this candle here closing below the stop price line, below the dot price line. And because of that, we're actually going to enter a short. So that the action of this candle closing below the dot price line makes this into a selling window. And we're going to manage our trade the exact same way, as if that dot price line were an open price line. So enter 3 positions, 3 stops, target 1, target 2. There it is. And you're done for the day. So entry, all 3, target 1, move stops to break even, target 2, hold runner position to 9:47 at the close of that candle, let go of the trade. I mean, I don't know about you folks, but just that one trade right there, that make goal and I'm out. I'm over it. I'm done for the day. That's plenty of ticks for the scale that I'm at right now. There's I'm not going any farther than that. Does that make sense? And then obviously the opposite would be true for a selling window turning into, yeah, that one does close above. That one ends up being a loss. So this candle does close above here, just barely, you can see. So you'd enter long here and then get stopped out. And then of course it comes right back. And then you could enter long again here. I'm not saying that's what I teach. To enter more than once in a window isn't something that I recommend, although I've had it work plenty of times. And then you do hit target 1 here, and then your 2 remaining positions. Actually, this is a good opportunity to show you folks. So the sellers did not show up here at 1036 at this blue dot. We were forecast to go down. We actually end up going up. But for all those of you who've had the software for a little while and you have read and understand the histogram guidebook, know that this is a pattern 4. So we're not surprised that the price ends up going the opposite direction. If you're not using patterns, though, the only other thing that you can really do here, well, there's a whole bunch of different things you can do here. If you're going to use other indicators and add to it, or I don't know, whoever or whatever. But if you're not going to use patterns, the other strategy that Back to the Future teaches is the stop punctures. So you could go long if the price gets up and closes above the 1036 dot price line. So here is a loss, and then we end up having a let's see, target 1, and we're holding on to those other positions, and then we got stopped at break even right here. Does that make sense? If you didn't get stopped at break even, then you could have, so sometimes I'll just move, I'll move my stops instead of all the way up to break even. You can just cut your risk in half, and that'll save a lot of break even stops. The NASDAQ just seems like it's a magnet. I'm telling you, it seems like it's a magnet. As soon as I move stops to break even, price just starts inching towards it, and it will take you out a considerable amount of time if the market is ranging. You'll get taken out at those break evens, and that can be detrimental to the equity curve. But if the market's trending, then by all means move that stop to break even. But either way, so simply just move the stop to break even as soon as target 1 is hit. Just throwing out other ideas here. This 1103. This is a brand new high. Why does this 1103 signal end up producing a down move? Well, because this is a pattern 5. This is a higher high right here on this candle. And then we go down, and then we go up. I remember this move earlier today. And then we come into a blue dot, and then we go down. Because that's what you want to see, and this is what I teach people. What I like to see is the price moving up into blue dots and down into white dots. If that's not happening, then watch out for pattern 4 or pattern 5. If your price is moving down into a blue dot, well, maybe the move's already over. Watch and see if it's going to actually qualify as a pattern 4. And if the price is moving up into a white dot, be careful, because the price of it might have made its move early, and we could be looking at a pattern 5. Pattern 4 and 5s can be quite lucrative. Ron has a really cool, if you buy the software, you'll have access to all sorts of videos and training. Ron has a really cool way of trading the pattern 4 and 5s with very little risk. Let's see if I can find one. This is cool here. This is like, I'm just going to get into a little bit of advanced stuff here just for a second. So at 10:30, just because it's like so perfect. At 10:36, we put in a brand spanking new low. The most recent low, I mean, you could say it's this, but really, I mean, it's that, right? It's here. And if we make sure that our little arrow is level, which we can do just by doing that, we can see that this wick here is lower than this low. So we definitely put in, whether we're looking at this low or this low, we definitely put in a brand new low at a blue dot. Well, what the heck is up with that? I thought blue dots were supposed to mean down. Why does this one go shooting in the opposite direction? Well, that's the genius of Michael and Ron, and one of the other genius things of this company. Like, I really wish I would have figured this out. I really wish I could take credit for pattern 45. I really do. But I can't. I have to give the credit where credit is due, and that's Michael and Ron. I wonder if it was Michael or Ron who were like, oh, there's these inversions. Well, let's test them. That's probably both of them. So pattern 4. Now, when you get to a selling pressure time, it should go down or stop pulling up as quickly, right? Most of the time, yes. But sometimes the banks pull a fast one. They get to a new high faster than they thought they would, and they buy instead of sell. Gann called these inversions. But dead people use big, complicated words to explain stuff. Well, how can we tell when that happens? It's all about location, location, location. When there's a prior swing low, a structural low, and the selling pressure time bar, the one to the left or the one to the right, breaks that bar, we expect a pullback or a full-on reversal up at that time. That's what we're seeing here. Right? When there's a prior swing low and the selling pressure time bar, the one to the left, it could be this one, it could be this one, or it could be the next one, breaks that bar, we expect a pullback or a full-on reversal up at that time. The next page is the pattern I'm talking about. There it is. I mean, it's like, it's such a perfect example. I had to go into it. So as you're tracking the market, you watch for the big down moves, which is exactly what I was just talking about. If you get a big down move like this with a brand new low, structural low, even more than this and this, then watch for the market to pull a fast one and actually go in the opposite direction. And that's exactly what we have here. So if we were to go to our software and go to indicators, TimeWarp, and simply uncheck the show signal dots only box, we're gonna watch, and the software will do this automatically for you folks in real time. It's a good habit to press F5 to reload NinjaScript if you're not sure. If you're not sure on this candle, like, oh man, that could be a pattern 5 coming up, or like while this candle is forming, I think that could be a pattern 5 coming up. The software hasn't printed a 4 yet. Sorry, did I say 5? I meant 4. The software hasn't printed it yet. I don't know. Click F5 and it'll reload NinjaScript, and you might get an earlier jump on it. But the idea is to be able to spot these without the software even holding your hand. So we uncheck the box, we'll click apply, and we'll watch a 4 show up here. Most likely, hopefully, based on that. Yeah, there we go. So there's your 4. And there's the 5 that I was just talking about. Brand new high, brand new high. Really, I'd almost feel like it should have had an arrow here. So let's finish the pattern 4 lesson. Why not? Well, I mean, I guess we kind of just did finish the pattern 4 lesson. Yeah, I don't even want to get into this whole 38% thing. That's a whole other level. We don't. I mean, I don't use that part. Simply though, that is enough. So here, if we're trading with patterns, instead of shorting, let's see what happens on the next candle. Oh, geez, that doesn't close below. Does that close below? Nah, no, it closes on. Okay, so we never shorted anyway because we didn't get a candle closing below, right? So to add patterns into the system that I have been teaching for quite some time now, all we do is trade a pattern 4 to go up. So we're going long, same exact way. So this is going to be our close above candle here. And we're going to enter right at the close of this candle because pattern 4s mean up. They're the opposite of 2. They're both even numbers, 2 and 4. 2 means down and 4 means up. They're almost like even numbers. They're siblings, but they're fraternal twins. They're both even numbers, but they're opposite. Does that make sense? Same with pattern 1 and 5. They're siblings, but they're fraternal twins and they're opposite. They're not identical twins. Because a 1 and a 5 are both odd numbers. 1 means up and 5 means down. One's a boy and one's a girl. One's a girl, one's a boy. It just actually makes a lot of sense. And then we hit pattern target 1. We hit target 2, and see how much earlier we're into this move other than waiting for the puncture of the dot line. We crushed it on that trade because we were paying attention to pattern 4s. And then if we wanted to, we could have also got in here at the dot cross, taken a small loss, and then we could have gotten back in at the dot price line cross and close above as well if we wanted to. I don't use oscillators or any other EMAs or SMAs, nothing anymore. This is what my chart looks like. I do add an ADX, which tells me a quantitative, at least in some kind of quantitative way, if the market's ranging or trending, but that's literally it. Let me see if I can find, while we're talking about patterns. Oh yeah, so here's a pattern 5. That's not a really definitive clear one. Let me see if I can find a really clear one. Show me something clear. Now we see how the price moves down into this pattern 1. That's the best. Price moves down into that pattern 1, and then bam. You want to try it? You know what? I probably shouldn't be showing you this, but I'm going to show you anyway. Look what happens when you split. You can split things up. That's crazy. My dog never barks. 1 second, I'm going to mute so I can shut my dog up. Sorry about that. Hopefully she'll shut her little dog yapper. There you go. Good dog. Good dog. That's a good dog. Yes, we don't need any barking. It's not really especially helpful on that signal, but you can split these signals up into thirds. I could talk more about that if you want to book a mentor session or something, but what I really wanted to show you is the price moving down from this high, putting in arguably a new low here. I mean, looks like a new low to me. Look at that down move, and then bam. And then if we're going to trade this one at 328, we have a close above the open price line, but we need that HMA to be white. There it is. Oh, that's sad. Oh, we still make. Do we get stopped out of break even? No. So this is the beauty of this system. Even though what's cool about this entry is it's a small risk. For a 5 minute, oh no, we're looking at 1 minute. 16 tick risk on that. There might as well be nothing. And we still make a target 1, a target 2. And then the coolest thing about this trade is it doesn't come back and stop us out at break even. Definitely not. Let's drag it all the way. Right there. And price comes all the way back to where target 2 was, and then we actually hold that runner all the way for 158 ticks on a 1 minute chart. It's really nice. This would have been emotionally a little bit challenging, but you can trail your stop. You could trail your stop. You could take your fib tool once you got your measurements correct, right? You could do something like this. And then you could incrementally trail your stop with, I don't know, every candle that closes above the next line, you could move your stop up. Right? So like say we hit target 1, target 2, then this candle closes above this line, then we would have to place our stop here, and then we'd get stopped out on the other position there. Or you could do every 2 lines. There's a host of different ways that you could do that. Just wanted to share some other ideas with you folks here. Did that help anybody with their pattern 4 and 5s? Hopefully it helped at least somebody. I kind of just feel like pointing some things out. So this pattern 2 here, it actually, you know what's cool? Oh, there, it helped Dave. Nice. Nice. What's cool about this pattern 2 is like it actually doesn't come up and hit our ATR stop. That's still a few ticks away. And it does move down. That's just a testament to the software. I mean, there's a reason that the standard is 1.5 times the last 7 bars, right? So 1, 2, 3, 4, 5, 6, 7 bars. 1, 2, 3, 4, 5, 6, 7. And the average of these 7 bars is this distance. Does that make sense? Okay. Okay. Let me see here. I wanted to tell you one more thing about the pattern 4 and 5. Oh, here we go. Here's a good example before we move on. So you heard me mention earlier that it's not just the signal candle itself that can qualify a blue dot to basically turn into a white dot. I mean, so if we go back to indicators and we turn on signal dots only, we have a blue dot here, okay? Which means down. However, where is the most recent low compared to this candle right here? This? Well, this is lower than that. Anybody can see that, right? Let's make sure that that's level. Looks pretty good. But this candle's wick, that's not lower than this or this, barely. Definitely not lower than this. Well, then why did the software call this 132 signal a pattern 4? Well, that's because it's not just the signal candle that can qualify a pattern 4. It's the candle before the signal candle itself, or the candle after. So if any one of these candles makes a new low lower than this low, or this low, depending on what settings you have, then it qualifies that as a pattern 4. So say it was the signal candle, or say these candles didn't, say they only came to here, but then the next candle, say that candle's wick came down to here. Well, then it's still a pattern 4 because it's lower than the nearest low. And here's how we can quantify that. You can just load up the old swing indicator. Everybody has this on their Ninjatrader platform. LMBQRS swing. And we'll start with a 5. Apply. So there it is. Swing indicator has plotted that this was the most recent swing low as far as a swing 5 definition is concerned. And speaking of definitions, if we go to our TimeWarp, how do we define a pattern 4 or 5? Like this took me a while to figure out and to be able to be comfortable with enough to trust the pattern 4 and 5s. It's really not, I have it as a 4 because I really fell in love with the swing strength 4 pattern definition. So, but if we change that to a 5, then it's going to be looking for the same thing that the swing indicator is looking for as far as the amount of swing. So Here's that new swing 5. Here's the previous swing 5. And then we can turn the patterns back on. And it should still be a pattern 4. It is. So if we made that pattern definition really small, like a 2 or a 1, we're going to get pattern 4 and 5s all over the place. So if we make this a 1, almost every single dot is going to be an inversion. That's ridiculous as far as I'm concerned. So 4 or a 5 on the NASDAQ seems to work great. And I'm not looking at 6s and 7s, only 4s and 5s. Oh, there was one more thing that I wanted to show you folks on that. Where was that other trade? It was like the 3 o'clock. Where was it? Shoot. No. Oh, I think it was on the other chart. No. No, it was on this chart. One sec. Let's get rid of that. Maybe it was earlier in the morning. No. No, I don't know where it was. It was a pattern 8. Pattern 8s they still are oh, here it is. They're still hard for me to spot while I'm actually trading, depending on how many instruments or how many different time frames I'm trading. But like right here at the 1203 signal, we put in a brand new low right here. As far as the swing 4 is concerned, this is low enough. The software will do that for you. Just push F5 while you're trading. But what's cool about this particular signal is it's not just a pattern 4, it's also a pattern 8, which is, again, an even number. So 2, 4, and 8, they're all siblings, but they're fraternal twins. One is not like the other. A pattern 8 is forecast to go in the same direction as a pattern 4. So whenever you have 3 lower closes in a row, 1, 2, 3, that's a pattern 8. So this is a pattern 8 and a brand new low here, a pattern 4. I don't know where I don't know. That's kind of interesting why it's calling that a pattern 4. Let's change this swing to a 4. Maybe somebody sees it already, I don't know. But regardless, that's definitely a pattern 8. Yeah, I don't know. Somehow it's calling that out. Let's see what happens. Yeah, bam. And we would trade this the same way. We would wait for a close above the open price line. But see, the software turns the open price line the opposite color. So we know that this is a long opportunity. Oh, there it is. That's why. That's why. Because it's actually the candle after the signal candle, which is just another testament to the system that I teach. Is we're not, I don't know exactly what's happening at the close of this candle. I want to wait to see where the next candle balances out. I consider this open price line like a balance point. So we get a new low right here. We can see that the swing indicator started to plot right here as a 4. And then we get a target 1. Do we hit target 2? Oh, you stinker. I don't think it did. Pretty darn close. But no, it did not hit. No, it's not even that close. So we hit target 1. And because we hit target 1, we move our stops, our 2 remaining stops, to break even. Bam. And bam, and then we get taken out at break even here. Then you can do break even plus 5 or whatever you want. And then what's kind of cool is, oh yeah, see, that is cool. So if we split this into thirds, we can see the pattern 4, we go up with this white line here. That's actually a pattern 5 split. We go down, and then this is a pattern 4 on a split, and we actually keep going down. Seems like we're downtrending. You definitely don't need those splits to work this system. I just think it's fun to mess around with. Just look at some questions real quick. I'm kind of running out of gas. Yes, I'm on Pacific time. Richard and Michael, why don't you send me an email after I'm done with the broadcast, and we'll see what we can do. Let's see what else, because I don't know, for some reason, like, I mean, because you all right, so here's why I don't feel like I have the energy or the time or desire to go over all the trades on the 1 minute chart. One is I've been literally moving from one house to another for the last like 6-7 days, buying new furniture and making multiple trips, and just like, plus taking care of my 7-year-old, and is like exhausted. And I have a meeting later after this. It starts at 6 o'clock. The other reason is I showed you folks a system. You can go test it yourself. You know? Where's my other chart? Oh, you better come to me. Yes, I want to see the 5 minute. There it is. I showed you the system, so you should be able to test any market you want if you have the software already. Obviously, if you don't have the software, call Dave and he'll get you the software. But yeah, just go back, and the YouTube video gets posted really quick. But you don't even need this YouTube video, actually, of this webinar. Just go back and watch any of the ones that I host. And so not last week, not the week before. I took 2 weeks off. And then just go back and watch any one of the other webinars. If you go about 45 minutes in, that's usually when I start to show the system. So you can just do this yourself on any market you want, any time frame you want, see what's works best. I feel like for me, I trade the NASDAQ 1 minute, 3 minute, and 5 minute with this system, and it seems to work great. And I've had lots of people email me and basically tell me the same. So I do, yeah, I think I'm running out of juice. But gotta go to this one. Oh, I'll show you guys this. I'm like really freaking proud of this. Check this thing out. This is my Apex. I qualified for Apex just a few days ago on the 20th. The Apex $250,000 account using Back to the Future trading software. This is the actual equity curve. I missed a day because I had to reset my my data. What's it called? I can't remember what it's called. I reset my database, so I missed like their days on this side. So it was just more going up basically. So the goal with that was to get with that account was to get to $15,000 in profit. So I missed. There's a couple of days down here. The goal was to get to 15,000 in profit without hitting a $6,500 drawdown. So I got that account, and I've been trading it live the last few days and making goal. So far, so good every day. So yeah, where is? Okay, so let me show you folks the buy now page. So you go to backtothefuturetrading.com. Oh, stop it. There we go. And then you go to product store. Then you go to TachEon TimeWarp. Oh, I should mention the reviews. 83, 5. Oh, they're probably not all 5 stars. Maybe they are. These are real card carrying people who have actually purchased the software. It's really hard to maintain 5 stars with any review company. And Back to the Future has been doing it. I mean, I actually wrote one of these reviews last year, 5-star. So, I mean, that says something. And the 13 years in business, that says something too. That says a lot. So you go to TachEon TimeWarp, then learn more. Then you scroll all the way down. TachEon TimeWarp, and you can read all this stuff. You can listen to Michael. And then right down here at the bottom is the buy now for $24.95. Oh, geez, good. Yeah, well, apparently their neighbor is mowing something. And then you can check out with the prawns. Hold on a second. I'm going to mute for a second and close this window. One sec, guys. Okay, that's better. So you can check out with the Pro Training Room. You can get a discount, 25% discount on the Pro Training Room. That's Tuesday, Wednesday, and Thursday. And you can watch either Ron or this is other gentleman, Garrett, who's a really good trader. I've seen him trade the Warp software. So check that out. If you want to just go without the Pro Training Room, we'll just click on this. And then we scroll down, blah, 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 blah. And then we have a promo code. And that promo code is warp off apply. So we get it under $2,000. And remember, institutional grade trading software. Go back and if anybody who doesn't own the software, just go back and watch any of the NASDAQ videos that webinars that I did. There was 5 weeks in a row. If you can send me an email if you can't find it, Jacob at backtothefuturetrading.com, and I'll send you the first one in the series, or ask. I don't know, I guess you could ask Dave or have him email me or something. But if you just go back, let's see, well, we just do it 7 weeks, 5, 6, 7, or 8 weeks if you count this week, and you can watch all sorts of the whole trading days get analyzed and added to a spreadsheet and all sorts of fun stuff, and prove easily that this software is worth this and more. I mean, I think they could probably get $5,000 for it, but there you go. And then call Dave, because maybe there's like other little cherries on top that he could throw in, but that's one of the beauties of having Dave as the sales guy. There's only a few people here at this company. I mean, it's a family business, really. That's the way I look at it. There's me doing the mentor thing and the webinars, and then there's Dave doing the sales and making deals, and there's Rachel, who's the general manager of the company and doing the tech and the installs and helping anybody if they have any software questions, like technical questions. And then there's Michael and Ron up in the clouds above, but they're still alive, thankfully. You can also set up one-on-ones with Michael and Ron, and that's pretty, I mean, it's pretty amazing actually that a software trading company, even you can even talk to the owners. Like you can literally talk to the owners of this company. It's a very, very rare thing. So yeah, enter your promo code in there, warp off, WARPOFF, and then click apply, and you'll get the price down to $2,000. Call Dave. Dave, what's your, can you post your stuff in the chat so I can read it out? It's Dave at backtothefuturetrading.com. That's D as in David, D-A-V-E at backtothefuturetrading.com. Call Dave. Maybe he's got some extra cherries on top to throw if you don't have the software yet. So thank you everybody for being here. I really appreciate it. I have a lot of fun doing these webinars most of the time. And yeah, call Dave.
happy trading. Enjoy the rest of your evening, and I'll finish the webinar like I do with a Bob Ross quote that I turned into a Jake Royall quote that's about trading. There are no mistakes in trading, only happy accidents. Over and out.